Hello investors, welcome to Proceemo, the value stock analyzer. Today is December 18th, 2022. Happy Hanukkah! For this week's analysis, we are looking ahead to 2023. Many major financial analysts are posting their stock picks for 2023. Those that are not predicting all-out economic collapse are looking towards your classic stalwarts. Companies like Berkshire Hathaway, Amazon, and Google. One stock that I've seen on multiple sites that got my attention is Bank of America. It's a company I've always found interesting and one with an interesting history, so let's dive in. Don't forget to like and subscribe. Your support will help us continue making content for you, and please check out Proceemo.com to check out the following analysis for yourself. Bank of America in the form we know today has only been around for about 25 years, since 1998, when Nations Bank and Banks America merged to form Bank of America. Over the past 25 years, Bank of America acquired some seriously large financial services companies, including MBNA in 2005, which at the time was the largest credit card company in the United States. In 2007, Bank of America acquired LaSalle Bank Corporation, a banking stronghold in the Great Lakes region. In 2008, Bank of America acquired Merrill Lynch for $50 billion worth of stock amid the beginning of the housing crisis that led to the Great Recession. Since then, they went through a period of downsizing, settling some lawsuits with the US government for billions of dollars, purchasing some assets overseas, and continued expanding. All this modern history has left Bank of America as the second largest financial services company in the United States, only behind JP Morgan Chase. The originating history is maybe even more interesting, and after researching, might be a great topic for a future video. It involves the son of a murdered Italian immigrant in California creating the Bank of Italy in San Francisco in 1904. That man's name is Amedeo Pietro Giannini and is considered one of the most influential people in banking in the 20th century, having opened up banking to the middle-class US population and helping shape the modern holding company that we know today. Bank of America operates in all 50 states with over 4,600 branches and over 15,000 ATMs with more than 46 million customers. Let that sink in for a second. 46 million customers. That is a massive customer base. Let's dive into the financials. Bank of America is trading at $31.70 as of this morning. It's down over the past 12 months, down 28.81% actually. 12 months ago, we were at $43.16 compared to that $31.70 where we are at today. At this price, we have a price to earnings ratio of 10.03. As we like to say with regard to PE, would you be willing to invest $10 into Bank of America for $1 of earnings? And add to that a dividend with a yield of 2.78%. So a PE of 10 and a nearly 3% dividend yield. Not bad. Implied growth is 1.27%. Implied growth is a calculation that tells us how much growth is estimated for the future based on past earnings. However, as we love to say, past earnings do not predict future results. At 1.27%, we would say fair value for the stock is about $35 a share. Not much higher than where we are at today. Looking at revenue growth, revenue over the past 6 years is pretty stagnant. Average 5-year revenue growth is 1.35%, and 3-year average revenue growth is negative 0.69%. Earnings tells us a different story. Over the past 6 years, we do have a nice increase in earnings from $17.91 billion in 2016 to $31.98 billion in 2021. That's an earnings increase of about 78%. We do have a really big dip between 2019 and 2020. They do recover nicely from that dip in 2021. That dip was caused by low interest rates and loan losses, all due to the pandemic. They stayed profitable by a large margin, all things considered. Looking at our key metrics, free cash flow was down at the end of 2021, a side effect of that pandemic year. Bank of America has climbed back to a positive cash flow in 2022, and they will report their earnings in just a couple of weeks. Enterprise value is at $338 billion, which is the price we say someone would need to pay to acquire them. Being the second largest bank in the United States, I think it's safe to say the bank will not be acquired anytime soon. This enterprise value is also quite a bit higher than its market cap, which is $254 billion. We'll talk more about this when we get to the ratio on our scorecard. Before the scorecard, what does institutional ownership look like? It looks consistent, up a small percentage year over year from 66.78% in 2021 to 67.19% as of Q3 2022. We have seen institutional ownership drop in many other stocks this year, not Bank of America. Now the scorecard. Implied growth over actual earnings growth is 0.07. This is very low, but their earnings growth is also really inflated because of the down year during the pandemic. We frequently ignore this ratio and we will continue to ignore it here. Liabilities over assets is high, 0.91. We usually say a healthy ratio is between 0.3 and 0.6, and higher than 0.6 means the business might be more leveraged than it should be by traditional measures. Banks are hardly traditional when it comes to leverage, though. I would argue banks are in a healthy range at this level. Anything under a ratio of 1 is probably a good place to be. At 0.91, they are similarly placed compared to other banks like JPMC, who comes in at 0.92. Banks are held to a lot more regulation when it comes to leverage, especially after the 2008 financial crisis. Steady dividend is true. Let's take a look. 10 quarters ago, we were at 18 cents a share, and now we are at 22 cents a share. That's a 22% increase in 2.5 years. That's a really strong increase in a relatively strong period of time. Operating cash over dividend payout ratio is negative 89 cents. This is usually a red flag. This is based on that negative cash flow, though, which has been coming back to a healthy spot this year. The scorecard will update to a healthier ratio after earnings are reported in a couple of weeks. If this were to come back negative again, we would be really worried about that dividend. All indications are that Bank of America is doing much better this year on the cash side. Assets greater than 120% of market cap, that's a great sign of value, and more expected to see this in banking versus other verticals like tech, where we cover quite frequently. Our earnings growth rate indicators are all false because we don't have increasing earnings by any means. Market cap to enterprise ratio is 0.75, which is a good spot to be, and we noted this earlier. A value of 1 would indicate a fairly priced company, greater than 1 would mean a stock is overpriced, and less than 1 means the stock is potentially underpriced. That's a lot of technical info. How would we summarize Bank of America? Personally, bank stocks don't excite me. They're all very similar. Lots of assets, lots of revenue, good PE, and slow growth. Bank of America ticks most of these boxes. They do have a lot of growth in the last 6 years in the way of earnings, but stock price hardly reflects it. In January of 2018, Bank of America was trading around $30 a share, not far from where we are today, despite 5-year average earnings growth of nearly 20%. Arguably, this is a great thing for value investing, for the stock price not to be reflecting its great performance. If anything, though, it feels like a lack of confidence in the market on bank stocks. The financial sector is still rebuilding trust since 2008, I would say. So from that perspective, maybe banking financial services will be the next bull market. Who knows? Bank of America is a solid stock. It probably does deserve to be higher than where it is trading today. Will it be a stock that doubles or triples in value over the next few years? I doubt it. This feels more like a blue chip stock to me. Maybe it grows 40 to 50% in the next 5 years and pays that nice 2 to 3% dividend yield along the way. In that light, this is a great retirement fund stock. I like the idea of my 401k or my IRA invested in this. Not for my high growth portfolio though. I reserve only high growth potentials for that one. That's it for today. Please like and subscribe if you found this helpful. And if you really want to support the channel, please go to Proceemo.com and subscribe to our monthly service to see analysis like this for yourself for only $5 a month. And if you have a stock you'd like to see featured next week, please comment below. Thank you, happy investing, go find some value.